Bitcoin and Ethereum, and I believe Ethereum weighted even more so, are the two biggest coins in your portfolio. What is the third coin in your portfolio?
Interesting enough, how I did this was I chose Bitcoin and Ethereum, and I switched. I started with Bitcoin, I then added Ethereum, I then switched. Then I just did an equally weighted basket of a bunch of all the other protocols, DeFi, other stuff. So whatever ends up appreciating the most at any one point will have the highest weighting. But I've not made a macro bet on a single other one. Then I've started taking macro bets on social tokens. But these are smaller, less liquid things. So you can't take a huge value of your portfolio because it's very early. So as a risk thing, I'm like, yes, I want some social tokens and I want a bit of the metaverse too. So that's how I've constructed it. So I don't have any difference in weighting in my head between Cardano, Polkadot, Aave, any of this stuff. And they're all different things, different use cases. But I said, look, I don't know. I'm not smart enough and it's not my job. I mean, I don't do it with the S&P 500. I'll just buy the market if I'm trying to express the market view.
What are your thoughts on EIP 1559?
I just wrote an article about this and I called it the greatest trade in the world.
Please go on.
So you're getting the scoop in Global Macro Investor, my kind of institutional research product. This setup is absolutely brilliant. So the chart pattern was this lovely wedge in Ethereum. The Ethereum chart is following the Bitcoin 2017 chart, which would give it an upside projection of 20,000. Backed that up by the network growth, where Ethereum is growing at about 50 to 60% a year in network growth, and Bitcoin's growing at 30% a year. So this is astonishing growth at scale, right? So this is not an early project. We've got all of the developments with NFTs and DeFi and everything and social tokens, everything's on Ethereum. The chart of Bitcoin versus Ethereum also is going to give a lot of people to switch. All of this is happening at exactly the same time that 1559 is coming. And then you look at the on-chain analysis. Most people spend the time, like Willy Woo, looking at the stuff on Bitcoin, but very few people actually bother with the on-chain analysis of Ethereum. The reality is the amount that's being staked for ETH 2.0 is going up all the time. It's huge numbers. Then the amount that's being put into DeFi and locked away is huge. Then the stuff that's going off the exchanges into hard wallets is enormous. That has left us with a free float of 13%. And 1559 is now going to reduce the supply somewhat, let's say from 4% to 2%. And it's going to probably lower the gas fees a bit. And with the variable block sizes, help with the speed unblocking of the network. So in which case, more transactions will go through, which will mean more burning. So you've got a massively reduced halving of the supply rate, probably, maybe more. You've got 13% of coins on exchange coming off exchange like at 1% a month, 2% a month. So, another couple of months will be 10%. There's no coins. And like NFTs are just showing you demand is exploding. You're set up for an exponential move here because everything has come together all at one point in time. And tomorrow? No, Thursday is the day. Now, does it mean that all happens in one go? No, don't be silly. We'll have corrections. There'll be like, the rumor sell the facts. See, I told you it was wrong. All of that kind of noise. But generally, you look back by December or March of next year, I think what's going to happen as soon as 1559 goes through, everybody who's got a sizable stake will realize that the price is going up. More people will lock into 2.0 to get the yield. Let's say 2.0 comes out in March. You're going to take all the supply off the market and with record demand, and they're all going to be locked until March. Then probably what happens is 2.0 comes out, everybody unlocks, and the great bullish thing is actually a bearish thing. Exactly like Coinbase was when the moment Coinbase came out, Bitcoin peaked because people had another opportunity. Everyone's like, this is great for the space. In the end, you change the dynamic. So I think the unlock will probably lower the price. But between now and that unlock, oh my God, this is one of the best setups I've ever seen. I think arguably better than Bitcoin in March 2020.
What's maybe the biggest piece of advice you would give somebody entering the crypto space today?
The piece of advice is, what do you want out of it? What are you looking to do? How old are you? What is your risk tolerance? Are you looking to learn? Do you want to figure out how markets work and this looks interesting to you? Well, then decide, okay, in that case, don't go all in. Just put a bit of money in and get a feel for it. Get an understanding of what these different things are, what project really works for you, and enjoy the process of learning, losing money, making money, being the dumbass, and then thinking you're a hero and then realizing you're not. All the things that every person who ever invests has to go through, do it and enjoy it. And if you can write notes so you actually learn, it's really, really useful. If, on the other hand, you're saying, okay, what I want to do is I want to get exposure to this space because I want a long-term investment. I want to build a significant thing like I would have done to my 401k or in addition to my 401k, then that's a different conversation. Then what you would do is start looking for portfolio allocation, which is, okay, safety first. You want the highest quality product with most of your money in it. So that would be Bitcoin. And then you probably want Ethereum, a decent size because the network effect and its use cases are so enormous. And then after that, you start thinking like I'm thinking. It's like, what do I know about the next part of this? Do I have any informational edge? Do I just buy the Bitwise 10 and just do that? Is that a smarter way of getting that investment? Probably. And then maybe in a couple of years' time, when you're starting to understand areas that really excite you, it might have been DeFi, it might be social tokens, it might be anything, it might be NFTs, that you can start then allocating a bit more of your own money into those bets. So that's how I play it. It really depends what kind of thing you're trying to get out of it. You can get both out of it as well. You can put your regular dollar cost averaging plus a few lump sums in as you go, and you can have a trading account and lose all the money and be the complete ape. And that's okay. You can be both.
Let's say you weren't the successful businessman and investor that you are. Let's say you had a risk profile of you're relatively young and you don't have a lot of money, maybe $1,000, but you wanted to take advantage of hopefully the best part of the rest of this bull run. How would you turn $1,000 into $1 million? Like, what would you do if you had nothing?
You never start an equation with that. Right? That's just not investing. What you're doing there is wildly speculating in the desperate hope you're going to make money. The answer is, what you should be saying is, how can I maximize the return out of my $1,000 without losing it all? So will Bitcoin go up as much as Ethereum over this cycle? I don't know. Are either of these going to go to zero? No chance. Can I write my $1,000 off and say, I don't care, I'm going to flip it into Doge? Fine, you're just speculating. So, there is no get rich quick. It doesn't work in this world. That's just pure gambling. And you might as well just go to Vegas with your $1,000. So the answer is, you can never approach it that way. There's a couple of things that I think are important to me. One is an open mind. The issue with this space is if you decide some network is your thing and you invest your $1,000 that you think is going to go to $1 million, you're now going to go on Twitter and every place fighting for your network. And that's good and also bad. You can fight for your network and be inclusive. I don't like the fractionalization of everybody. Everybody's fracturing into small tribes because they think it's good for their own position and for their thing, but it's a bigger picture out there. It's a big world out there. And I just don't get it why people are doing this, because they're turning people off. The amount of people who got turned off Bitcoin in the last 9 months is astonishing. I mean, I've got various points where I've just thought, you know what, I'm just going to sell my Bitcoin. I just don't give a shit anymore because this group is so toxic. And it happens elsewhere in many other tokens. And it's just not right. So that's one thing that I really observe. And the other thing I'm really passionate about in getting people to understand how to take risk. Because buying a small, unknown, newly issued token is not the same as buying Bitcoin. And the Bitcoin people will say, they're all scams. No, they're not. These are VC projects, some of which will be scams, as every company in every walk of life. But these are new projects, and we don't know if they're going to succeed. And that's okay. It's like real-time, mark-to-market VC. And anybody who's built a business knows that your business is worth zero half the time. Half the time you think you're going to get rich, and half the time you think, oh, I'm going broke. And until it finally gets traction. That's normal. So you need to allocate according to the risk you're taking. Now, you may be the really, really smart person who really knows their space and really knows the network effects and the possibilities, and you'll take a larger bet. And that's okay. But, it's teaching people how to use risk management, because so many people are into this space and new to investing. And that's cool. But just to understand some basics about where to be happy to lose money and where to be happy not to lose money. And I'm not even talking about trading. I'm just like, you won't lose as much money in Bitcoin as you will lose if you get it wrong in a small token. So you don't put the same amount of money in each. And, I think that lesson for people is a huge lesson to learn.